Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. So, previously, we have revised the chapter Audit of NBFCs, which was a very good revision actually. So, in that video, I have told that I will be revising the chapter Audit of Banks also. But from after I have made the previous video, I have fallen extremely sick and it took some time for me to recover. So now I have started doing good once again. So the moment I have started doing good, the first thing which I have done is this revision of the chapter Audit of the Banks. So in this video we will try to revise in a very comprehensive manner, so the all important concepts and aspects relating to the chapter Audit of the Banks. So as you could see here, when compared with the Audit of the NBFCs, Audit of the Banks chapter is very huge in syllabus. So that's why we will not be going through each and every aspect of this Audit of Banks, the things which are relevant for your examination, and where there is a chance of testing the MCQs and all those areas we will focus more. But at the same time we will try to make sure that I'm trying to cover each and every important detail in this chapter. So I will try to do it. I will try to ensure it from my side. So just pay attention, watch this video till the end so that you don't miss out on any important details from this particular chapter. So having said that, let me proceed further now. So first of all, a few aspects I will try to cover here. First, what are the characteristics? The first heading, as you could see here, first they are talking about what are the various characteristics that distinguishes a bank from other commercial enterprises. See, like any other commercial enterprise, like we have various kind of business entities, we have this manufacturing entities, trading entities, service sector, like any other commercial entity. Even bank is also a commercial entity. But what differentiates the bank from other commercial enterprises? How do the banks differ from other commercial enterprises? So they have given here a few points, like as you could see, number one, they are custodians of large values of monetary items. See, banks are basically custodians. They are safeguarders of the monetary items like cash or your assets, financial instruments, etc. So they are the custodian of large volumes of the monetary items. Number two, they deal with a huge volume of transactions. Just imagine the volume of the transactions which will take place at the SBI on a daily basis. So we don't see this volume of the transaction in other commercial enterprises. So the main distinguishing feature of the banks from other commercial enterprises is that huge and large volume of the transactions. Then wide geographical spread. Today we have the banks which are having the most wide geographical spread across all over India. Not just all over India, in the entire world they have their geographical spread. Then there are commitments without transfer of funds. See, this is very important here. Banks will not involve only in those transactions which involve outflow of the funds. Even they incur some commitments without any outflow of the funds. The funds transferring and all will not happen. A single rupee will not move from the bank account, but still bank will engage in certain transactions like bank guarantee, letter of credit. So these are the commitments which banks will generally accept even without transfer of the funds also. Next, and also the transactions will happen at multiple points. See, as a customer of a bank today at my place I'm sitting here, at my business place I'm sitting here, and with the help of the mobile phone I can initiate a transaction. So at this point I can initiate a transaction. I need not go to the bank physically. So transaction can be initiated at multiple points. And no intervention, and in the banking transactions no manual intervention. See, if I have to transfer the money from my bank account to my family, there is no involvement of the bank staff here. I can do it myself. There is no manual intervention. International settlements, even they will undertake international settlements also, as we all are aware, and even they operate in a very strict regulatory environment than when compared with the other kind of business organizations. So running a banking business in India is not easy. There are various kinds of laws and regulations which you are required to comply the moment you initiate a bank. So if you see here, what is that regulatory framework? So here we have the list of laws and regulations which banks are required to comply with. So I told you, strict rules and regulations, right? They operate in a very strict regulatory environment, right? Sir, what are that laws and regulations which a bank has to comply with? So here we have the regulatory framework. Here I have given the list of all the legal framework. What is the legal framework? What kind of laws and regulations will become applicable for a bank? So that legal framework I have given here. This you can refer the entire list of laws and regulations which you are required to comply with. And sir, why special audit considerations are required in a bank? So in the previous heading, we have seen what kind of transactions will differentiate a bank from other commercial entity. So depending on these transactions, you might have already concluded that when we are conducting audit of a bank, we need to pay some special considerations. We need to consider some special things in our mind than when we are conducting the audit of other entities. So why we need to pay special audit consideration while conducting audit of the bank? They are not telling what are the special audit considerations. Instead, they are asking why special considerations will arise. Why special audit considerations will arise in the audit of the banks. So if you read the first sentence here, The special audit consideration arise in the audit because of, so why they are not telling what are those special considerations, but instead what they are saying here is because of what reasons we are required to undertake special audit considerations. Like as you could see here, a few items they say nature of risk associated with transactions, because depending on the transaction which banks are undertaking, it is giving rise to new kind of risk. And the scale of banking operations, the large scale of banking operations, and because of that, basically once again volume of the transactions, and from that significant exposure that is arising. And banks are depending exclusively on IT today. The biggest sector which is relying on the information technology is a bank. So that huge dependence on the IT is also giving rise to significant audit considerations. And there are various laws and regulations which they are required to comply with, just now as I have told. And even they are developing new products on an everyday basis. They are developing new accounting, new products and all. But for these new products, there are no new accounting models. So the way, the pace at which the banking business is expanding, at the same pace accounting standards are not expanding. And also introduction of this net banking and mobile banking, they have brought new risk once again, and they carry huge operation and financial risk. And banks use multiple applications for different transactions, like they use something called Swift, they use something called core banking solution. So they use multiple applications, and between them interface controls also paying a more attention nowadays. So these are the various reasons because of which special audit considerations will arise in the case of audit of the banks here. Understood? Next. Sir, how do you prepare the financial statements of the bank? So as we all are aware, we have a banking regulation act. In that banking regulation act, we have a format for balance sheet, a format for P&L account, and there are various disclosure requirements. So all that we need to comply. And most important thing here, RBI has deferred implementation of Ind AS for all scheduled commercial banks. So for all the scheduled commercial banks, RBI has a deferred implementation of Ind AS. That means for the time being now, they are not required to comply with the Ind AS. At a future date, they will notify. From that date, they will be required to comply with the Ind AS. But currently, the Ind AS applicability has been deferred. Important for MCQs. Right. Like any other entity, they also prepare standalone financial statements, consolidated financial statements, and not just that, the banks will have someone called statutory central auditor. And apart from that, for every branch, they also have someone called statutory branch auditors. Even branch auditors also will be there in the case of the bank. So that is one more differentiating feature. Generally, normal commercial enterprises, we only, in majority of the cases, we have central statutory auditor. But since banking transactions are happening only at the branches, but volume of the bank is very high, so what banks will generally do is they will have someone called statutory central auditor who will give a report on the entire company. Whereas for branches, they have separate statutory branch auditors also. Next, sir, how about the appointment of auditor? Sir, who can get appointed as an auditor and who will make the appointment of auditor? If I have to put it very simply, sir, who is eligible to act as an auditor? They have simply told a person, an entity which is eligible to conduct audit of companies. As per the provisions of the Companies Act, they become eligible to conduct the audit of a bank. Basically, if you are an individual, a chartered accountant in practice, if you are a firm, the firm in which majority of the partners are practicing chartered accountants. So those who are eligible, those who are duly qualified to act as the auditor of a company, the same people will be eligible to act as auditors of the banks also. Sir, who will be making the appointment in the case of normal banking company? That means, or let me put it this way, in the case of nationalized banks we have, right, which are under government control. So for those nationalized banks, the auditor will be appointed by their board of directors. Whereas in the case of a banking company, like we have these private banks like ICICI, Axis Bank and all, in case of these banking companies, the auditor will be appointed by the shareholders at the AGM. Whereas in the case of nationalized banks, it will be appointed by board of directors. But in both the cases, you need an approval of RBI. You need approval of RBI. So either in the case of banking company or in the case of nationalized bank, in both the cases, respective authorities will appoint, but in every case, approval of the RBI will be needed. And one more thing here, there is one common practice which generally banks will follow, especially in nationalized banks or public sector banks. They will appoint generally 4 or more firms of chartered accountants to act as a joint auditors. I told there will be central statutory auditor, no, but since volume of the banks are very high, so what they will do is this is statutory central auditor, especially in the case of nationalized banks and public sector banks, they don't appoint one single firm as statutory central auditor. They generally appoint 4 or more chartered accountants of audit firms for as their statutory central auditors to conduct the joint audit. Next, and here also like in any other entity, they will have the appointment letter, basically engagement letter kind of thing will be that, which will contain period of appointment and who will be the other auditors. Like as I've told, joint audit, if you are the joint auditor, who will be other joint auditors, and previous details of the previous auditors, what are the procedural requirements which they have to comply, and how the work has to be divided in the case of the joint audit. what is the scope of the assignment, what and all you are required to cover as a part of this audit. And in case of statutory branch auditors appointment also, there will be similar kind of appointment letter. But generally statutory central auditors will be appointed as joint auditors, but branch auditors, but there is no concept of joint audit, so there will be no division of work and all, which will be generally there in the appointment of statutory central auditors. Now, so now they will give a brief what are the various stages of conducting the bank audit. So what and all will happen in the entire bank audit, what and all various stages it will go through. Like you have different stages here. Stage 1, we have something called initial considerations. Basically what things you will do before we actually start doing the audit, what are the initial considerations. Then after that, the next phase of the audit is understanding, like the way we do it in normal entities also, we try to understand their business, their accounting process. So that process will follow. The stage 2 will be understanding. Then we do risk assessment. As we all are aware, risk assessment procedures is a primary audit procedure. And then we do execution. Actually, we start performing the audit. So that is the execution phase. And finally, we have something called reporting phase. So there are 5 stages of conducting the bank audit. So what are the 5 stages of conducting bank audit? We have something called initial considerations. Then we do something called understanding phase. Then we do the assessment of the risk phase. Then we actually execute the audit. And then finally, we do the reporting. What are our findings are there? Those findings are required to be reported. So now what and all are the various steps which are involved in each of this stage? If we have a look at it, like number 1, acceptance and continuation of the client relationship, like the way we do it in other audits. Here also we do acceptance and continuation of the client relationship. And specifically RBI has required, in the case of bank audit, the banker will get from you a certificate of indebtedness, a declaration of indebtedness. That means whether you are indebted to the bank, has your account been classified as a willful defaulter. So that declaration you must give, requirement of the RBI. And if you are conducting audit, you should make sure that you are not doing any internal audit assignments for the same entity. And also terms of the audit engagement, basically you will draft a engagement letter, what and all are the terms and conditions, you will include it in the engagement letter, you will sign it, you will ask the bank management to sign it, so that engagement letter you will get it done. And even you have to fulfill one of the professional ethics related requirement, communication with the previous auditor. If the previous position was held by another chartered accountant, you must communicate with him in writing, so that requirement I will fulfill. And then we will spend time on proper planning. And even we establish our engagement team, who and all will be our engagement team, who will be doing this particular engagement. We establish our engagement team. So these are all part of initial considerations. Then comes understanding phase. Sir, what and all I will understand? I will understand about the bank, its environment, including its internal control. So that's what we do in every entity. Then even I will try to understand their accounting process. Then also I will try to understand their risk management process, how they are managing the risk. If I have to put it in simple terms, risk management process is nothing but other name for the internal controls. So I will try to understand about their entity, environment. I will try to understand their accounting process. I will also try to understand their risk management process, how they are managing the risk. And regarding the risk management system, what things specifically you will check. So this is one important aspect. So as a part of understanding phase, they told that you will try to understand the risk management process. But what specifically you will try to understand in the risk management process? Sorry. So what basically you will try to understand in the risk management process? Number 1, whether those charged with governance are having a oversight, whether those charged with governance are having proper monitoring of the risk management process, and whether they are properly measuring, identifying and monitoring the risk. Have they implemented proper control activities, basically internal controls and all. And not just implementation alone will be enough, whether they are monitoring it properly or not. And whatever information systems, as we all are aware, today banks are the biggest users of the technology. So whatever information systems the banks are using, are they reliable? So that also we'll need to check it. So this is what specifically I will try to evaluate regarding the risk management function. Then after that, risk assessment we will do. So we will try to identify and assess the risk of metal misstatement as per SA 315. And we will try to analyze the risk, especially relating to money laundering. Since banks have a chance of involving and engaging in the money laundering transactions, I will try to particularly assess whether there is any risk of fraud relating to money laundering, and especially there I need to check whether banks are complying with the KYC norms or not. That I need to specifically pay attention. And whatever risk which are at financial statement level, if it, as we all are aware from the risk assessment chapter, we need to identify risk of metal misstatement at 2 levels, at the financial statement level, at the assertion level. If you find that there is any risk of metal misstatement at the financial statement level, there you have to pay more attention. And today banks are outsourcing their operations, whatever their regular operations are there, that they're outsourcing it to the PPOs and KPOs. I need to check from outsourcing whether any new risk is arising. And this is what risk assessment phase. Then comes the execution phase. Sorry. In the actual execution phase, what and all will happen? Number one, engagement team discussions will happen, and whatever risk you have identified, to that you have to respond. How do you respond? By implementing, by performing the substantive audit procedures and compliance procedures. So you need to respond to that assessed risk. You have to establish your overall audit strategy as per say 300. Then on the basis of that strategy, you have to develop your plan. You have to determine audit materiality, what is material, what is not material. As per say 320, determine the materiality, and even evaluate whether going concern assumption is appropriate. Once again, I say 570 requirements, you have to fulfill it. And then finally, after that, what and all your findings are there. There are various reporting requirements are there. All that reporting requirements, we will see it in the subsequent part of the chapter. You need to fulfill all those reporting requirements. So one more distinguishing feature of audit of banks is, than when compared with the other entities, in the case of audit of banks, there are plenty of reporting requirements which you are required to fulfill. Not just one or two, we have a hell of a lot of reporting requirements which are required to be fulfilled, which we will see it in a short while after some time. So all that reporting requirements also we have to fulfill. So these are the various stages of conducting of the bank audit. Then some important IT information which a banks should share with their auditors. Since banks are highly dependent on the technology, there are some important IT environment details which a banks should share with the auditors, because the management of the bank are the people know who will implement the IT systems and all in the organization. So as a bank management, you need to share some important IT environment details with the auditor. Sir, what are that important IT environment details which banks must share with the auditors? So here is the list here which you can refer. They have to share their overall IT policy, what IT structure they have, what kind of environment of the bank's IT system, that this information they have to share, and how they are doing data processing, what kind of interface is there, data integrity, how they are making sure of data integrity and data security, how the data is getting protected, what kind of business continuity plans or disaster control plans they have, like backup plans and all, what plans they have, and accounting manual, critical accounting entries, and in that how much involvement of IT systems are there, let the auditors know. And controls over key aspects like especially accounting head, expense booking, overdue identification, in these areas what kind of controls they have. And controls on recording various e-banking and internet banking products. Today, as we all are aware, so today transactions are happening by way of e-banking, electronic banking. How the bank is identifying and recording these transactions? Definitely with the help of technology. Ask them to share that information. And also MIS reports, what kind of MIS reports are getting generated, any exception reports are there, those exception reports they have to share, and process of generating various information related to various disclosures. So this is some important key IT environment details which a bank should share with their auditors. Next. So especially this is extension of the previous question. So bank will share this information. The management of the bank will share all this information now. Now on the basis of that information, what are the key things which you will check? What are the key security control aspects which you will address? So if you see this thing here, key security control aspects an auditor needs to address when undertaking audit in a computerized environment. So management and all will share with you the information. Now, once you got the information, once you are doing the audit in a computerized environment, what are the key security control aspects which you will consider? What are the key security related things which you will consider? Basically, what internal control aspects which you will try to verify in a computerized environment? So very simple, authorized, accurate and complete data is made available. So today all the transactions are happening within the IT system. You need to check that whatever data that is inputted into the system for the purpose of processing, is it authorized, is it accurate, and is it complete? And if there is any interruption due to power, if there is any power failures, any mechanical issues, you need to ensure that if there is any power failure, if there is any hardware failure, the entity should be able to revive its operation without any distortion. That means from wherever it has stopped, from there it has to resume. No loss of data, no interruption of the operations. So you have to ensure that. And unauthorized amendments, system should not allow unauthorized amendments. Only those people with the with authorization, they can only make changes to the programs. Access control, only authorized people are having the access to the data and program, and unauthorized people are not having the access. Proper segregation of duties are there or not, and did they make any changes, and whether that changes are authenticated. If there is any manual calculations which have taken place, whether those manual calculations have done correctly, and why the need has arisen to do the manual calculation. And also exceptional transfer, if there is any exceptional transactions, whether they are authorized or not, you need to get the accounting master data and balance which is there in the master data, that cannot be modified. You can only get view data. And all GL account codes which are getting used should be authorized by the head office, and whatever balance is there in the general ledger, that should tally with the subsidiary books. Then inside the audit, there will be a department called Central Audit and Inspection Department. In every bank, you will find one department inside the organization called Central Audit and Inspection Department, which is headed by a person called Chief Audit Executive. So what is the name of the department? Central Audit and Inspection Department. Like this one department will be there in the banks, and this department will be headed by a person with a designation Chief Audit Executive. So now what this department will do? What is their responsibility? The main responsibility of the department is they are responsible for undertaking risk-based internal audit. What is the main responsibility? They are responsible for undertaking risk-based internal audit, and their main responsibility is to identify the branches, which branches are required to undergo revenue audit, and also they look after the concurrent audit related matters. They will make an appointment regarding the concurrent auditors, and they will give them the guidelines, what areas are to be covered, what branches will have to be covered in the concurrent audit. They even deal with all the concurrent audit related matters. So primary function of this department is to ensure that audit function is handled smoothly, efficiently, and effectively. So, and what is the risk assessment process? This we already know it. So this central audit and inspection department, on the basis of this, they will identify the risk-based areas, and accordingly they will make an appointment of concurrent auditors and make sure that risk-based internal audit has been carried out in the organization. Next, coming to the next aspect, what kind of internal controls will be there generally in the bank? See, here we have so many various things here. First, they will talk about some general controls which cover all areas of the organization. Generally, as a bank as a whole, in all areas, what kind of general controls they will have. Then they talk about internal controls in each and every specific area, like in cash, what controls should be there, in clearings, what controls should be there, in bills for collection, what controls should be there, in bills purchased, what controls should be there, loans, credit card operations. So like that, multiple points we will have. So we'll try to focus on the few important points, because even if I try to do a quick revision line by line, it will be just like reading the content only. So we will try to focus on the key aspects here. First, talking about general controls. What are the general controls which you should have? This is important. This we need to remember. Number one, shifted from employee should be shifted from one position to another. This only we call it as a rotation of duties, which we have learned in the risk assessment chapter. So there should be proper rotation of duties. Number two, work of one person should always be checked by other. Basically, internal check. This is what we call it as internal check system, right? So that should be there. And number three, arithmetical accuracy. Whatever transactions which are getting performed, all the transactions should have arithmetical accuracy. Bank forms, basically checks, traveler checks, DDs, unused documents should be kept in the safe custody. That means it should be kept in the possession of a responsible officer. And there should be signature check. Whenever any documents are submitted for clearing, they should get it done only after checking the proper signatures. And signature and telegraphic code, they should be kept in the proper custody. And we need to verify they have taken insurance policies against the loss, like cash loss and all. For all that, insurance policy should be there. And financial powers are separated. You should not keep all the financial powers in the hands of one person. That financial powers should be delegated, like branch manager only up to this amount, regional manager up to this amount, area manager up to this amount. So like that, you need to divide the financial powers. And also surprise inspections has to take place. So these are all some general controls which are operating over all the areas. Now if we talk about specific controls, and even we have some extra points also, like mail should be opened by responsible officer, and if any irregularities are there, they should be promptly rectified. Then in the area of cash, what should be the important internal controls? The first important internal control, the cash should never be kept in the custody of one single person. The cash should always be kept in the custody of two persons. It should be in joint custody of two responsible officers. Very, very important point here. And in addition to normal checks, even you need to do surprise checks also, and we need to check that on the day of checking, whatever balance you have counted, that matches with the books or not. And segregation of duties should be there. Cashier should not have access to customer ledger accounts. Basically segregation. The person whoever is handling the cash, the same person should not have access to the records. And whatever counterfoils are there, they should be signed by the proper person, and they should be properly stored at. And every payment should be supported by vouchers. Proper vouchers should be there. And every payment should be authorized by the responsible officer. If there is any high value cash receipts and payments, they should be verified by a higher officer. Now coming to the clearings. So what is the most important thing in clearings is, here some important points are there for MCQs. Now today we have something called check truncation system. That means if any check has to be cleared for payment, there is no physical copy of the check being transported. So what they will do is, they will take an image of the check, and that image will be transferred to the concerned bank. They will approve it, then the payment will happen. So that electronic clearing of the check, we call it as a check truncation system, where physical check will not be traveled, where physical check will not travel from one place to another place, only electronic image will get traveled. And one important point for MCQs, in case if the payment is for more than 5 lakhs, if the check payment has to happen for an amount of 5 lakhs or above, before they clear the payment, they have to call the customer or either email him. If any check payment bank has to clear and if the amount is more than 5 lakh rupees, they have to either call the customer or send him an email. Sir, we have got a payment request for 5 lakh rupees. Should we do the payment or not? We have to call them, and the signatures and all should be verified. So all this is general point. This is very important, where we need to directly call the or email the customer before clearing the payment. Then bills for collection, as we all know, banks doesn't do only this financing activities. They also provide some agency services, and bills for collection is one such agency service, where whatever bills that you are supposed to collect, you can hand it over to the bank will collect on behalf of you, and they will get some commission for that. And once again, this is not a financing activity, this is purely a agency service. And most important thing which here you have to pay attention is, in case of bills for collection, bank will transfer the payment to the concerned customer only after they have collected it. That is the main point of difference between bills for collection and bills for discounting. In case of bill discounting, even though the bank did not receive the payment, they will still transfer the money to the respective drawer. Whereas in the case of bills for collection, the bank will credit the party's account only after they have collected the payment. Why? Because it is not a financing activity, it is just a agency service. Next, one important point from here is, the bills which are sent for collection from one branch to another branch, as on the balance sheet date, they should not be double recording. It should be only in one branch, it has to be recorded. So if one branch has got the bills for collection and that branch is forwarding the bill to another branch for for collection, it can't remain in both the books. It has to be eliminated at the time of preparation of the balance sheet. So these are the few important points regarding bills for collection. Now we have bills purchased. Now this is a financing activity. So in case if the bank has discounted any bills, there what we need to check is whether what kind of controls should be there is all documents of title are properly assigned. So whatever title related documents are there, they should be handed over to the bank. Always sufficient margin should be maintained. And if the bank is unable to collect the bill, steps should be taken to recover the amount from the drawer itself. And if there is any outstanding balance, that should be reported to the head office. In case if the bill is extending over 2 years, whatever that discount income is there, that discount income should be apportioned between the two respective years. Then in the area of loans and advances, this is important. This we will go through line by line. So what kind of internal controls should be there in the area of loans and advances? Number one, before granting any loan, they have to grant the loan only after getting satisfied with the credit worthiness. Credit worthiness means basically repaying capability. Only when the bank is satisfied, okay, this customer will be able to repay the loan, then only loans should have been sanctioned. All necessary documents like loan agreements and all should have been executed. In every account, you have to maintain margin, not just at the time of giving the loan. On a continuous basis, margin should be there. And whatever securities are there, which are received and returned by responsible officer, whoever is receiving the securities, that should be under the authority of a proper officer. And the securities which require registration, they should be registered. Basically, they are talking about immovable properties here. They require registration. That registration should have taken place. And all the accounts should be kept both within the drawing power and sanction limit, especially in the case of CC loans and all. And all accounts which exceed the sanction limit or drawing power, they must be brought to the notice of management or head office. So these are a few areas of internal controls which must be there in the area of loans and advances. Then in respect of DDs, what kind of internal control should be there? Here mainly the focus on the signature, checking of the signatures and all. Next, inter-branch accounts, we need to check inter-branch accounts between the branches if any outstanding balances are there. For that, we need to get the advice. Advice basically in the sense confirmation. You need to get the confirmation from the other branch, then only entry should have been recorded in the books of accounts. If something is outstanding for a very long period of time, try to understand the reasons. And once again, one more important question which is tested multiple times is what kind of internal controls should be there in the area of credit card operations. This also will go in a detailed manner. So in the area of credit card operations, what kind of internal controls should be there? So let us see. Number one, effective screening of application. Same like credit worthiness only. You should not sanction the credit card to each and every person. There should be proper screening. Whose salary is how much, whose revenue is how much credit limit we have to give, whether this person deserves a credit card or not. So like that, we need to have an effective screening system. After that only credit cards should be sanctioned. And there should be strict control over storage. Unissued cards, whatever are there, they should be stored properly. They should be under proper control. And Merchant confirm status of unutilized limit. If any customer is coming and swiping his card at the merchant, he should be intimated whether there is a limit or not, whether there is a still limit is there or not. That kind of communication mechanism should be there. So system of prompt reporting by the merchants. Merchants also should report all the transactions which they have accepted on a credit card on a timely basis. And reimbursement to merchants will happen only after verifying validity of the transactions. All reimbursement should be immediately charged to customer. The moment you are giving the money to the merchant, you have to charge that respective customer. And also statements should be sent regularly. Credit card statements on monthly basis you should get it. And there should be a proper system to monitor and follow up the customers payments. You need to banks, that's why they send you reminders. Your due date is in 2 days, your due date is in 3 days, kindly make the payment. That proper follow up should be there. And also if there are any payment beyond the reasonable period, they should be attended carefully. If any customer is not paying the amount from a long period of time, for that you need to have specific instructions. And also there should be a system of periodical review of credit card holders account. So generally they will give you credit card, but on a continuous basis they have to do the monitoring, and they have to take actions. Like in some cases it will be necessary to reduce the credit limit, in some cases they will try to extend the credit limit. So like that you have to monitor that customer's account on a regular basis, and either increase or decrease the credit limit as per his credit worthiness. So very important aspect. Many a times I have tested in the RTPs, MTPs. So this is very important. So out of all that discussion, two things are very important: loans and advances and credit card operations. So basically these are the internal controls which must be there in different areas. Everybody able to understand, comfortable, right? So now let us talk about the next aspect, which is relating to responsibilities of the auditor regarding compliance with CRR and SLR. So going forward, we will have the concepts which will be talking about auditors' responsibilities. So till now, whatever we have spoken about, those are all relating to operational aspects. We did not speak about the management. We did not speak about the auditor's responsibilities. So till now, whatever concepts we spoke about, those are all something which managements of the bank have to take care of. Now going forward, whatever aspects we are going to see, these will actually talk about auditors' responsibilities. If you are conducting audit of any bank, these are your responsibilities in different aspects that tell us about our responsibilities. Now, first thing they talk about, what are the auditor's responsibilities regarding CRR, SLR. So as we all are aware, if you are doing banking business in India, you must comply with these two ratios, which is CRR, SLR. CRR stands for cash reserve ratio, which is nothing but a specified percentage prescribed by RBI, which you have to hold it either in cash or in the form of deposits with the Reserve Bank. So CRR is nothing but a percentage where a bank is required to maintain certain percentage of their demand and time liabilities. See, both CRR and SLR will be calculated as a percentage on DTL, demand and time liabilities, we call it. So a certain percentage of demand and time liabilities they have to keep, if they're required to keep it either in cash or in the form of deposit with the central bank, that we call it as CRR. On the other hand, SLR is also a certain percentage on demand and time liabilities which the bank is required to invest in some liquid assets which are in the form of gold, cash, government approved securities before providing credit to the customers. So there is a main differentiating factor between the two. CRR is something which will be there in the form of cash or deposit with RBI, whereas SLR is a percentage which will remain invested in the highly liquid assets. Now every bank has to comply. If any bank tries to violate the CRR and SLR requirements, then RBI might call for closure of the bank altogether. So that's why maintaining that CRR and SLR is very important. And regarding that CRR and SLR, whether the bank has complied with the CRR and SLR requirements on a continuous basis or not, that how we can obtain audit evidence. So let us see how we can perform, what kind of audit procedures we have to perform. First of all, how much percentage of CRR they have to maintain, how much percentage of SLR they have to maintain, and how to calculate the demand and time liabilities, all that they will explain in the master circular. RBI will release master circular. In that master circular, they will tell us the rules, instructions, how to calculate the DTL position, and what should be included, what should be excluded. So all that details will be provided in the master circular. So before we can perform audit procedures, first we have to get the copy of the master circular, read it, what instructions have been given for the calculation of demand and time liabilities. So first is that we need to obtain an understanding of relevant circulars or instructions given by RBI. And see, since the CRR and SLR will be calculated at the overall bank level, so the branch auditors will send their weekly trial balance. See, the CRR and SLR will be calculated on a fortnightly basis. Once in 15 days they will calculate, as on Friday they will calculate. So branch auditors will send their weekly trial balance on Friday, and these branch related trial balances will be consolidated at the head office level, and based on that, DTL position for the entire bank will be determined. So now, as a statutory central auditor, you should request the branch auditors to verify whether the branches are sending the correct trial balances to the head office. Why? Because if the branch related trial balance is correct, then only consolidated detailed position will be correct. Then only correct CRR and SLR will be maintained. So as a statutory central auditor, you can request a branch auditor to examine that weekly trial balances. And also check out you should test check, that means on a sampling basis you have to check the consolidation process or against that branch returns whether the DTL position has been properly consolidated at the head office level or not, so that you can test check on a sampling basis. Then they have given a few items here which I would request you to go through once, just have a look once, you need to remember it. So they have given certain list of items which have to be excluded from the DTL position. As I have told, from on the DTL only you will multiply that percentage, right? Now, while calculating that demand and time liability position, what are the components which are required to be excluded? A list of items they have given, what are required to be excluded, and what are specifically required to be included in the demand and time liabilities. That list also they have given. And also exempted, what are that exempted categories of DTL on which CRR and SLR need not be multiplied. So they have even given that exempted categories of the items also on which you need not maintain that CRR SLR requirement. So three categories they have given here. So what is required to be specifically excluded from the DTL position, what is required to be specifically included, and what are the categories of the deposits which are exempted from CRR or SLR requirements. I request you to just have a look at this list of items once. Next, then after that, once you do that calculation part and all, then we need to check whether consolidation prepared by the bank include all the relevant information. So as I have told, consolidation will happen at the head office level, whether they are including all the information for the consolidation or not without leaving out anything, that we need to check. And balance in the branch adjustments accounts or foreign branches also should be taken into account. And a considerable part of information required is flowing from the branches. So you can do one thing, you can ask the consolidation of this information at the regional level and ask that at regional level consolidation should be countersigned by regional manager. This also you can see at every region wise you can ask them to consolidate and ask the concerned regional manager to authorize it, to approve it. Then this regional level trial balances will be consolidated once again at the head office level. That also you can ask for. And today they are using something called automated data flow, where manual consolidation is not happening. In the core banking solution software itself, they have brought some new feature called ADF, automated data flow, where the software itself will calculate the total consolidated DTL position and automatically CRR SLR ratios will be calculated. So today they are using that automated data flow system. You need to perform some audit procedures around that automated data flow also. Understood? So these are the points which are required to verify regarding compliance with the CRR and SLR requirements. Now the next aspect which they speak about is how do you verify investments? Investments? No. Yeah, they talk about assets. They talk about different kind of assets. First they talk about cash, bank balances, money at call and short notice. See, cash balance is something which will be there with every branch, whereas a bank balances, this information might not be there at every branch. Why? Because treasury operations are only handled by the treasury branch. So there only you will find the bank balances and money at call and short notice. But in every branch you will be able to find something called cash. In every branch you will find cash. Whether you will have bank balances and money at call and short notice, whether this will be there or not, that depends on the nature of the branch you are conducting the audit. Now, what should be your audit approach? You need to check existence and completeness, whether cash and bank balances are existing, have they been completely recorded. And as I have told, cash will appear in almost all the branches, whereas every branch might not have a bank balances. But that will highly depend. Why? Because all these operations are handled by treasury department and these balances should be reconciled periodically. Now, what are your audit procedures regarding cash? What you will do, the only audit procedure which we can do regarding cash is what? Physical verification, and try to do it as close as possible to the balance sheet date. And if the branch is maintaining some balance with the RBI, how can you verify? You can get the ledger balances with the bank confirmation certificate from the RBI. You can get the external confirmation and you can prepare a reconciliation there. And review reconciliation, pay special attention to the following terms. That means if there are any differences between the two, that will be reflected in the reconciliation statement. So in that reconciliation statement, you have to pay attention to what are the cash transactions which remain unresponded, which revenue items are not at written off or adjusted, or any other credit or debit entries which are there in the statement provided by the RBI but not there recorded in the bank's books. So that you need to do the reconciliation. The same thing even for balances with other banks also. If any bank is having a balance with other branch or other bank, for that also you will prepare the reconciliation statement, and under the reconciliation statement you can have differences under multiple headings. Try to obtain evidence regarding all that differences. And money at call and short notice, this also every bank can't do, only specified branches, especially treasury branches only can do. And for doing that also they need proper authorization. So check whether if the bank has kept given any money at call or short notice, there is a proper authorization for that. And for that money at call and short notice, there will be various instructions or guidelines. Check the compliance with that instructions. And even you can get external confirmation in the form of certificates also, you can get it. And even you have to check receive subsequent payments. If you want to know whether balance sheet, as on the balance sheet date, the amount is correct or not, that you can even verify it by way of subsequent repayments also. And also whether on all these accounts interest has been properly calculated or not, we need to check it. So this is what we need to verify regarding cash, bank balances, money at call and short notice. Then how do you verify investments? So here also if you see the audit procedure, what audit procedure you will verify regarding investments. Here we check internal control system and investment policy. So every bank will have an investment policy where they can make investment, how much portfolio allocation they will do. For government bonds, how much allocation they will do. For mutual funds, how much allocation they will do. So like that, every company will have one investment policy. So that investment policy you have to understand. Not just that, they will also have various internal controls surrounding the area of investments. So try to verify that internal controls, try to understand that investment policy. And also separation of investment functions, basically segregation of duties. The person whoever is doing the investment, the same person should not be given access to the records of the investments. Reconciliations, here also if the balances are not matching, if the investment balances and all are not matching, here also you need to prepare reconciliation statements also you have to prepare. Then all related documents relating to investments you have to verify, like whether all investments are made within its authority, within its power. Any covenants or conditions which restrict, qualify or update the right of ownership have been complied with. Sometimes when they make the investments, they come with some conditions. Whether they have complied with that conditions or not, we need to check. And acquisition or disposal, that you can verify with the contract note. Broker will give you a contract note. With the contract note you can cross verify. And even you can do physical verification. Basically that investment scripts and all will be there, right? If you invested in mutual funds, that the mutual fund statement will be there. If you invested in FDs, fixed deposit certificate, they will do. If you do investments in bonds, they will give the government bond, physical copy of the bond you will get. So try to verify all that investments wherever possible. Physical verification you have to. So verify the investment scripts. If it is the government related investments, you can get the investments with the public office, public debt office of RBI. From them you can get it. You can get the balance confirmation. If you are getting the external confirmation, try to comply with the requirements of SA 505 also. And more attention you have to pay for the bank receipts. In our regular class we have understood this bank receipts in a very excellent manner with the help of even practical scenarios. We discussed about the Harshad Mehta scam and all. So their bank receipts are there. So that bank receipts are very, very important. You need to cross verify the bank receipts, get the confirmation from the other banks. If any bank receipts remain outstanding for a very long period of time, so you need to ask them why that bank receipts has not yet been settled yet. And generally whatever investments which are held by the bank, they will be broadly divided into three categories: held to maturity, held for sale, and available for sale. So like that, in three categories they will try to classify the investments. We need to check the proper classification. And if they are shifting something, they are shifting from available for sale to held to maturity. Initially they told that they are holding these investments for the purpose of sale, but later they have classified it to HTM, held till maturity. So now I need to understand the reason why they have done that shifting. Is it valid or not? Then you need to check valuation. So whether all these investments are properly valued or not. Once again, the valuation will depend on the classification. Held to maturity will be valued in a different manner, held for trading will be valued in a different manner, and available for sale will be valued in a different manner. So we need to check that they are classified into proper categories, and according to the classification, valuation has been done or not. And in case if the investments are classified as non-performing investments, then also we need to maintain proper valuation for that. And income from investment should have been properly accounted for. Dividend income, interest income should have been properly accounted for. And any method of valuation, if valuation method has been changed when compared from the last year to the current year, give a proper disclosure. And if the investments are sold, profit or loss arising from the sale of investments has been properly accounted for. And the TDS on the investment income, on the dividends, on the interest, also sometimes the TDS will be deducted. check that whether that TDS has been properly declared in the income tax return, if any excess is there that has been got as a refund or not. So we need to check that. And sometimes the banks will do the investments on their own, and on behalf of their clients also they will do the investments, which we call them as portfolio management services, PMS we call it. So in case if the client is dealing in securities on behalf of others, there should be prior approval and income from that should be recorded properly, and any undisclosed liability, if any is there, that also has to be communicated. And a special purpose certificate relating to investments. So this is once again for in case if you are holding the investments on behalf of others, you need to maintain one separate account. If the bank is doing investments for their own purposes and also they are doing the investments on behalf of their clients, both they cannot do it in a single account, they have to divide it. And as per RBI guidelines, banks are required to get their investments under PMS separately audited, nothing but portfolio management services. Under that, if any investments are done, that has to be audited separately. And then finally, some reporting requirements they are asking you. Auditor must take half yearly review. So when it comes to investments, every half year they have to do the review. It should not only cover operational aspects, even they have to verify whether amendments have been made to investment policies and all. And even they can do concurrent audits of the treasury operations, and they need not forward every report to the internal audit, every report to the RBI. Only whatever major discrepancies are there, that if you report to the RBI, that will be enough. Next, then comes the most important activity which will be done by the bank, giving of advances. In the area of advances, what and all you will try to verify. First, we can divide the advances into different categories on the basis of nature of advances, like short-term loans, long-term loans, like that we can divide, and nature and extent of security, secured, unsecured, and place of making advances, whether local advances or foreign advances. So like this, on different basis, we can divide the advances. Now, what is your approach? What mainly you will try to obtain audit evidence? If you are conducting this aspect is many a times attested. So in case if you are conducting audit of advances, what are the major items? What are the primary items regarding which you will try to obtain evidence? So if I am conducting audit of advances of a bank, I am primarily concerned regarding obtaining evidence of the following matters. What are they? Whether amounts included in the balance sheet, are they really outstanding as on the balance sheet date? Nothing but existence. And advances represents amount due to the bank. Whatever advances that have been reflected, they are only showing those amounts which are due to the bank, and they are supported by proper loan documents. Every loan should have an appropriate loan document, and there are no unrecorded advances. Completeness assertion, I need to obtain evidence. And stated basis of valuation is appropriate. They have been done valued properly or not, nothing but valuation assertion. And they are classified, described in accordance with recognized accounting policies, right? Classification, secured, unsecured, long term, short term, NPA, non-NPA, standard, substandard, that an appropriate provision has been made properly. So proper provisions has been made or not. So if I am conducting audit of advances of the bank, these are the main items regarding which I will try to obtain evidence. Now, what audit procedures you will verify? So what are the suggested audit procedures? When it comes to internal control, first I need to check in the area of advances whether internal controls are working effectively or not. Sir, what kind of controls I will verify? This we have already seen. Previously, if you remember, I have told you what kind of internal controls should be there in the area of loans and advances, right? So whether those internal controls are there or not, that only we will verify. So this I am not once again going through. Why? Because what kind of internal controls should be there in the area of loans and advances, that we have already covered is a concept in the previous discussion. So whatever internal controls are there, whether they are actually there or not, that we will verify. So basically, you will first try to evaluate the internal controls. So once you have done that, once you are done with the compliance procedures, now you perform substantive audit procedures. So what you will do there? So you will verify the correctness of master data of the loan accounts. So there will be one master database of all the customers. You will try to get the copy of that master data. And every customer account should be tagged under single customer ID. You might have multiple loans, but all that loans should be tagged to one single customer ID. Customer ID only one will be there. Under that one single customer ID, you can tag multiple loans. And you need to check whether proper classification has been done for SMA 1 and SMA 2 advances. See, what is this SMA 1? See, we all know NPA, right? So generally an account will be classified as NPA if it remains overdue for more than 90 days. So then it will become NPA, right? But before an account becomes NPA, there will be one more classification, SMA 1, SMA 0, SMA 1 and SMA 2. That means which are not at overdue for more than 90 days, which are overdue for less than 90 days only. Like if I have to give you one scenario, let me give you a scenario on what basis we will do the SMA 0, SMA 1 and SMA 2. So, so in SMA also we have three classifications. So we have SMA 0, just a minute. Yeah, SMA 0 refers to those accounts where the account has remained overdue, but if it remains overdue within 30 days, then it will be classified as SMA 0. If it remains overdue for 30 to 60, it will be classified as SMA 1. If it remains overdue for 60 to 90, it will classify as SMA 2. If it remains overdue for more than 90 days, then it will become a NPA. So like that, even we need to identify when we are performing, when we are verifying the advances, we need to pay more attention to SMA 1 and SMA 2 advances. Why? Because they have a more chances of falling into NPA category. And even we need to go through the concurrent auditors report, internal inspection reports, RBI reports to see whether in any of the reports they have given any negative comment regarding the advances. And if there are any restructured advances, we need to get the list of all that restructured advances. And if there is any quick or early morality, sir, what do you mean by that? If an advance is turning into NPA within 12 months of its sanction, you have sanctioned the loan. So within 12 months of sanctioning the loan only, that has been classified into NPA. There might be wrong credit worthiness and all. Checking credit worthiness is might not be getting checked properly. So you need to pay more attention where there is a quick or early mortality. And also completeness and accuracy of interest, whether on all that loans and advances interest has been properly provided, and even you try to perform analytical procedures. Then periodical statements submitted by the borrowers, especially in case of cash credit loans and all, or short-term loans, you need to borrowers will send quarterly stock statements that you need to verify, and you need to get the copy of latest financial statements and inspection of security. That reports also we have to get, and even auditors report in case of borrowers having credit facilities from the bank. So even you have to get their auditors reports also. So these are the few audit procedures which I will try to perform regarding the advances. Then they say about what procedures you will try to verify regarding asset classification, income recognition, and provisioning. So guys, here more than audit procedures, instead of learning how to do the audit of asset classification, income recognition, and provision for NPA, these days they are asking the questions on MCQs on provisioning requirements. They're asking the questions on provisioning from CA Inter. They're asking the questions. So let me give you a brief here. Let me just take you through the provisioning requirements as per the RBI. So that we will have a look. Why? Because this content is not given at the CA final material, but they're asking the questions from the CA Inter level. Provisioning norms they're asking. So just we will have a look once. Yeah. See here. So first of all, when an account, this we will understand, audit procedures are simple. Whether this has been followed or not, those are only our audit procedures. So the most important thing is when asset will be classified as NPA, when what are the different categories of the assets, for each category of asset, how much provisioning. So these questions are getting tested a lot. We will focus. See, this content will not be there in your CA final material. This is the extract I am showing it from the CA Inter material. This you will not find it at the CA final. First of all, when you will classify an account as NPA, so they say that an asset will become NPA when it ceases to generate the income. But the condition they have given is if an interest or installment remains overdue for a period of more than 90 days, then it will be classified as NPA if it is a term loan. If it is a cash credit or overdraft facility, if it remains out of order for more than 90 days, then it will be classified as NPA. Then you will get a doubt, sir, when a cash credit or overdraft facility will be classified as out of order. So see here, when a cash credit loan or overdraft loan will be classified as out of order. See, if it remains out of order for more than 90 days, sorry, the account remains out of order, not for more than 90 days. If the account remains out of order, then it will be classified as NPA. Sorry guys, I was in a hurry. Yeah. See, if it is a term loan, if the interest or installment remains overdue for more than 90 days, it will be classified as NPA. If it is a cash credit loan or overdraft loan, if it remains out of order, then it will be classified as NPA. Now you will get a doubt, sir, when it will become out of order. Like if you see here, if our outstanding balance remains continuously in excess of sanction limit or drawing power. So for working capital loans, there will be sanction limit or drawing power. If the account's usage balance remains in excess of sanction limit or drawing power on a continuous basis, then your account will become out of order. Or the outstanding balance is within the sanction limit or drawing power only, but there are no credits continuously for 90 days. Sometimes in the OD account, the amount utilized will always be within the sanction limit and drawing power, but that there are no credits for continuously for 90 days, then also it will become out of order, then it will go to NPA category. And they say one more thing here, credits are there. Account is used within the limits. There are some credits also, but whatever credits are there, they are not even enough to cover the interest. Credits are there, but they are not even enough to cover the interest for a period of 90 days, then also it will be classified as out of order. So this classification is very important. And once you have classified the assets, then depending on that, you have to create the provisions. You have to create the provisions. Sir, how much provision for which category of asset? And one more thing also should be there. Just give me 1 minute. There should be asset classification. Asset classification will be more or less similar to the thing whatever we have seen in the NBFC. Right. See here. Sir, what is a substandard? See, standard is something which is good. No overdue, nothing. Standard is something which is everything is in good format. Sir, substandard. When an asset will become substandard, it will be one which has remained NPA for a period less than or equal to 12 months. So up to 12 months of NPA, it will remain in the substandard category. For that, we need to create 15% of the provision. When it will turn into doubtful, would be one which has remained in the substandard category for a period of 12 months. Up to 12 months, it will remain in the substandard. After 12 months, it will go to doubtful. Sir, once it has gone to doubtful, how much is the provision? If it is unsecured, if it is totally unsecured, 100% provision you have to create. For unsecured, you have to create 100% provision. If it is a secured component, if it is up to 1 year, 25% doubtful. If it is remained in doubtful category 1 to 3 years, for secured component 40%. If it remained OD for more than 3 years, it will remain 100%. For unsecured component, always 100%. For secured component, depending on the duration for which it is remaining in the doubtful category, the percentage of provision will change. Then loss asset, always 100% of the provision should be created for. Clear? And one more most important thing you have to remember here, the NPA classification should be borrower wise, not facility wise. NPA classification should be what? Borrower wise. Like for example, there is one customer, he has taken 4 loans. Say for example, he has taken housing loan, he has taken personal loan, vehicle loan, credit card is there. See, on the housing loan, it remained overdue for more than 90 days. On personal loan and vehicle loan and credit card, he is making all the payments on due date, but only in respect of housing loan, it remained overdue for more than 90 days. If that is the case, not just housing loan, all loans will be classified as NPA. All loans will be classified as NPA. That is what the meaning here. The asset classification should be borrower wise, not facility wise. Even if one loan has been classified as NPA, the entire borrower, all the loans in the name of that borrower will be classified as NPA. Understood? So this you remember. Once you remember this audit procedures are nothing but just checking the compliance and all. Then the next most important thing here from here is this one. Sale or purchase of the NPS. This aspect is very, very important. So now what banks have, what RBI has given the flexibility is, if you are a bank, if you are having an NPA, that NPS you can sell it. That NPS you can sell it. But there are some conditions which have been given here. This aspect is also getting tested multiple times. So let us try to focus here. What is the procedure? What are the conditions in the area of sale or purchase of NPS? So a few important things I have to say here. So first thing, only such NPS should be sold which remained in the NPA category in the banks for at least 2 years. If an account has remained NPA in your bank account for a duration of 2 years, minimum duration 2 years that has to remain in your books as NPA, then only you can sell it as, Condition number 1, only such NPS which have remained NPA for at least 2 years, they only can be sold. And these NPA should be sold without recourse. That means entire consideration you have to receive well in advance. Conditional consideration should not be there. And once you have sold NPS, all the risk and reward will get transferred. You should not carry any risk there. So without any recourse, you have to sell it. And once you have sold the NPA, the bank will not assume any legal, operational or any other kind of risk with regard to that sold NPAs. And NPA should be sold only on cash basis. As I have told, entire consideration you have to receive upfront. And one more important thing here, the bank has not purchased an NPA which has originally sold. Say for example, Axis Bank is there. It has sold one of its NPA. It has sold one of its NPA to ICICI Bank. Now from the ICICI Bank, once again, they can purchase the same NPA. Can the Axis Bank once again purchase the same from ICICI? No. So whatever has been sold once by the bank, that can't be purchased again by the same bank. Next, what about the accounting treatment? Say for example, if NPA has been sold, if the selling price is less than the book value, say for example, NPA value in the books is 100 crores, but you are able to sell it only for 80 crore rupees. 20 crores of loss is there, no? So what should happen to that loss? That loss should be debited to the P&L account. Sir, what if there is a gain? Say for example, book value is 100, but I was able to sell it at 120. Sir, what about this 20? Can I reverse my previously recognized provision? Can I recognize it as income? No. Why? Because if you have made any surplus from the sale of NPA, that surplus should be used for knocking off the loss on other sale of NPAs. You can't reverse the provisions. You have to use that excess surplus amount for adjusting the losses on sale of other NPAs. So that's what they say here. If the value is higher, excess provision shall not be reversed, but that excess amount will be utilized to compensate for the loss or loss from the sale of other NPAs. So, okay, sir, I'm a bank. I have purchased an NPA for 80 crore rupees. Now I will make a recovery out of that. Sir, how I have to adjust for that recovery? So they say that if you have started recovering from the NPA you have purchased, initial amount will go to offset my acquisition cost. After that, if I collect anything extra, that only will go to my income. Say for example, I purchased NPA for 80 crore rupees. Till the time I recover 80 crore rupees, it will go and adjust my acquisition cost. Beyond that 80 crores, any excess amount I have recovered, that I can recognize it as income. So that is what they say here. Recovery in respect of NPA purchase is first adjusted against the acquisition cost. After that, whatever is there, that will be classified as profit. Understood? Right. Next. Then the next aspect which you will verify is fixed assets. So banks also will have fixed assets here. So mainly we can divide them into two categories. One is a premises and the other one is others. Sir, what will come in the premises? In the premises, what will come is those assets, those immovable properties which are either taken on lease or owned by the entity. So basically, which are basically owned by the entity. Like if you see here, premises wholly or partly owned by the banking company for the purpose of business, including residential premises used by the banks of bank as shown under premises. That means whatever immovable properties are there, which are getting used by the bank for the purpose of carrying out their business, or if they are using it for the purpose of residential purposes of their employees, like SBI, if you take SBI, quarters will be there, no, that is also getting used for the business only. Either the bank is holding an immovable property where they are running their branch operations, or the bank is holding one immovable property which is getting used as a residence for the employees. Those only will come under premises heading. Say for example, I am a bank. Okay, I have given one loan to the customer. Again as a security of some immovable property. If that customer did not pay the loan, this property will get transferred in the name of the bank. There is one customer. This customer is having one house. That house he has given as security, took 1 crore rupees of loan. Customer is not paying. Now what will happen? This house will get transferred in the name of the bank. Now this house which has been transferred as a settlement, it is not getting used for banking business. It is also not getting used for the purpose of residence of the bank employees. Now this property will not go to the premises heading. It will go to others heading. And also there is one more rule here. RBI says that if you have acquired any property as a settlement, acquired any mobile property as a settlement, and if you are not using it for your business purposes, you have to dispose it within a duration of 7 years. Within 7 years, you have to sell it. You can't keep it like that. Why? Because as a bank, your business is to give loans, not to hold immobile properties, right? So if you have got any loan, any asset as a settlement of the loan, if you are using it for your business purposes, well and good, fine. If you are not using it, you have to dispose it within a duration of 7 years. You have to dispose it off. And for that 7 years also, it will not go to premises category. It will remain in the others category only. So broadly two categories, premises and other fixed assets. So I have told you what will go to premises, what will go to other fixed assets. Next, so few more important points from here. Suggested audit procedures, yeah. So first we need to verify internal controls. So what kind of controls we need to verify regarding fixed assets? Number one, there should be proper control over expenditure. Any expenditure which is getting incurred on fixed assets, either acquired or self-constructed, we need to have proper control. Accountability, that asset should be in the proper possession of some responsible officer. And information controls for ensuring reliable information about fixed assets. How many fixed assets are there, where they are located, proper records they need to maintain. And ascertain whether accounts and respect are maintained at the branch office or at central. Generally, fixed asset records will be maintained by the head office. You have to verify where the records are getting maintained. And location of documents of title, where the ownership documents are maintained, whether at head office or local offices. And also whether any acquisition, disposal, everything have been properly communicated to the head office. If at all any acquisition, sale is taken care by the branch, whether it is intimated to the head office or not, that also we need to pay attention. So regarding premises, especially when it comes to premises, what and all you will verify? We will verify opening balance has been carried forward correctly. If any new premises are acquired, check whether there is proper authorization approval mechanism. And if any self-constructed assets are there, you can cross-verify with the contractor's bill, work records, etc. And even you have to reconcile them with the ledger balances. And leasehold premises, capitalization, amortization of the lease premium, especially finance lease accounting treatment has been done properly or not. And if title deeds are held at head office or other location, so you can communicate you can tell the statutory central auditor to verify them. If you are a branch auditor, your branch is holding some immovable property, but title documents are there with the head office, you can intimate to the statutory central auditor, he will do the verification for you. So if for premises under construction, you can use a separate heading, premises under construction, and whatever advances you have made, whatever advances or payments that you have given to contractors for the purpose of construction of the fixed assets, they should also go under the heading fixed assets. If any revaluation has been done, you need to understand what is the basis for that revaluation, and also whether any surplus or deficit has been given proper treatment as per accounting standard, and no immovable properties other than those required for use of bank have been included in fixed assets. This I have already give you example. Only those immovable properties which are getting used for business or getting used for residence of the employees should be included in premises. All other assets should go to other fixed assets. Then, so what are procedures which you will perform regarding other fixed assets? Same, whatever we have done for previous, all that will equally apply to other fixed assets also. And in respect of movable fixed assets, if the assets are getting moved from one place to another place, there is a proper record maintained for tracking that movements or not, that we need to check. If any discrepancies are there, whether they have been properly dealt with in the books of accounts. If any transfer of asset has taken place, one asset has been moved from one branch to another branch, even its accumulated depreciation also should have been transferred. And if there are any intangible assets, check the requirements of the compliance with AS 26. And fixed assets have been properly classified, proper classification has been done or not. And whether expenditure incurred on fixed assets has been brought to its working condition. So all the expenditure which has been incurred till the time it has been brought to the stage of intended use, everything should be capitalized. And at the head office level, examine if the proper consolidation of all the fixed assets is taking place or not. Next, if any assets are sold, check that sale deed, receipt of sale value, and profit or loss has been properly accounted for. If any leased activity is there, try to check the lease agreement and check the compliance with the AS 19. And if any impairment has taken place, try to check the compliance with the AS 28 also. So this is what regarding the verification of fixed assets. Fixed assets basically includes premises and other fixed assets. So now going forward with the further discussion. So once we are done with the verification of fixed assets, now we have some other assets. So we have a broader category where they say all other assets which doesn't fall under specified categories. So that all other assets, they have given one heading and they are giving us few steps which are required to be verified, which are required to be taken into mind when auditor is verifying that other assets. See, here I will not talk about all the things. All these things are very repeated things like intra-office adjustment, interest accrued, all this is fine. Few things I will talk about it here. Like if you see stationery and stamps. Now you all will get a doubt, sir, how come stationery and stamps will be a asset? You generally will feel that, sir, whenever stationery expenses are incurred, that will be charged to the statement of P&L, no? So stationery and stamps is something which should be going for expenses. Why you are saying it as assets? Now here, when I say stationery and stamps as an asset, which kind of stationery and stamp they are talking is, see, generally they will purchase something called a bulk stationery. Head office will purchase in large quantities. Like if I give you one example, so it includes exceptional items like bulk purchase of security paper. Like for example, SBI is there. Now SBI is having all over India various branches. For all the branches, they need one stationery called security paper. Now they will not buy as and when required. So they purchase some very bulk quantity. Say for example, some 5 crores amount of security paper they have purchased. So now it will not be consumed immediately. It will be generally kept at the head office, and wherever required, they will start distributing it. Now this kind of stationery will be considered as assets, not regular stationery expenses. This kind of security paper which has been purchased in bulk quantities, generally kept at the head office, that will be recognized as an asset, and as and when it is issued for consumption, then it will be charged to the statement of the P&L account. Able to understand? So that is what the stationery they are talking about it here. So when I say stationery and stamps as a other asset, I am referring to only exceptional items like bulk purchase of security paper. And if normal expenditure is there, normal expenditure of stationery, it will be charged to the statement of P&L account. It will not be recognized as an asset. So exceptional items we will treat it as asset, normal items we will charge it to the statement of the P&L account. And this item will generally not appear at the branch level. As I've already mentioned, this is something which you will see it at the head office level, not at the branch level. And when it comes to this kind of stationery and stamps, which is included in other assets, we need to verify existence, effectiveness, continuity of internal controls over these items. And wherever suitable, you need to physically verify this stock also. And as I have told, whenever this stationery and stamps are getting consumed, then it will be charged to the statement of the P&L account. Clear? Next. See, this point I have already covered. Non-banking assets which are acquired in satisfaction of claim, like bank will give a loan, but if they are unable to recover it, as a satisfaction of the claim, they will get that property registered in their name. And one important point I have already told you here, that rule within 7 years you have to dispose it off. So that rule somewhere they will try to specify it here, right? Yeah. So one important point here, this one ensure that as whenever that asset has been acquired as a satisfaction of the claim, at the date of acquisition, that asset should be recorded at lower of net book value or net realizable value of the asset. Why? Because it will not go to the fixed assets, it will go to other assets, right? Why? Because and even bank will have a condition that these kind of assets are required to be settled within 7 years from the date of that acquisition. So that's why, as on the date of acquisition, how you will value that assets is you will calculate what is its net book value, and also you will calculate what is its net realizable value. Whichever is lower, at that value we will try to include it in the bank's books. Then apart from that, yeah, so these are the two major items from other assets which have a high chance of getting tested in the examination, from where questions are going to come from. Now we will proceed with the next item, which is capital, verification of capital. Guys, regarding capital discussion, we had significant chunk of discussion in our NBFC. Here also they will say in order to strengthen the balance sheets of the banks and all, they specify some minimum capital ratios which contain tier 1 capital, tier 2 capital. Tier 1 capital is a high quality capital, tier 2 quality is a comparatively less quality of the capital. So like that, all the things will remain same like NBFC audit. So only one thing extra, only one thing which you have to remember is, here RBI has given, in the case of NBFCs, they have given different percentages of CRAR, right? But here, if you see, in the case of banks are required to maintain a minimum CRAR of 9% on an ongoing basis. So there they have told different ratios in the case of NBFCs. In the case of banks, the RBI's requirement is minimum 9% CRAR they have to maintain. And while calculating that ratio, you have to consider tier 1 capital, tier 2 capital. Tier 1 capital is the highest quality capital, tier 2 capital is comparatively less in quality. And how do you verify the capital and all as per RBI rules and regulations? So all the provisions are going to remain the same. So all the verification steps are going to remain the same. Only the percentage of maintenance of CRAR is going to change here. Then also banks also will have reserves and surpluses, and those reserves and surpluses also, they have to fulfill some disclosure requirements. For every kind of reserve, they need to include some disclosures. Broadly, we can divide the reserves into various categories, like some are statutory reserves, some banks are required to maintain certain percentage of their profits in specified reserves, and capital reserves, share premium, revenue and other reserves, and even the balance in the P&L account. And one requirement of the RBI in respect of statutory reserves, capital reserves, and securities premium, talking about these three things. For these three reserves, they have to show what is the opening balance, what is the addition or deletion during the year, and what is the closing balance. That disclosure they have to compulsorily give for these three kinds of reserves. Which reserves? Statutory reserves, capital reserves, and share premium. And while verifying these reserves and surpluses, what will be your audit approach? First, we will verify whether last year opening balance has been carried forward. If there is any addition or deletion, we will check, we'll cross verify with the board resolution. In respect of reserves and share premium, especially share premium, you can't use it for whatever purposes we want. We have section 52, which is giving guidelines for which purpose we can use it. So we have to check the compliance with section number 52. And as I've told, some banks are required to maintain certain percentage of profits to a reserve fund. Check whether that requirement applies for your client bank. If yes, whether they have transferred that certain percentage to that reserves or not. And if the bank has been granted exemption, if certain bank has been granted exemption, okay, you are not required to transfer that percentage to reserve fund. Check whether that conditions are complied with or not. And as usual, from share premium, if any amount has been utilized, we need to check for what purpose it has been utilized. In case if you are having foreign branches, according to the foreign laws, you need to maintain some extra reserves. Check the compliance with the foreign laws and regulations as well. Then deposits. Here comes the most important part. Here also, when you are verifying current and savings account, as we all are aware, Banks will accept deposits. We can broadly divide the deposit into multiple categories. One is savings deposit. Banks will accept from the customers. Then they will accept current deposits, and also they have something called fixed deposits. They also have something called recurring deposits. And the most common kind of deposit which will be there with the bank is savings deposit and current deposits. Savings deposits are something which are for personal purposes. Current accounts are maintained for something for business purposes. On savings account, you will be entitled for interest. Generally, on current accounts, interest will not be paid. But in today's environment, some private banks are paying a minimal rate of interest. But majority of the banks will not pay any interest on the current accounts. But on savings bank, you will be entitled to receive the interest. So many a times I have asked the question, what are the audit procedures? How you will verify the current and savings accounts? This has been tested multiple times. We will see the audit procedures in this area quickly. Then, so you have to take a sample from the current and savings accounts. You have to take a sample. You have to check the KYC norms. So today, if you want to go and open the bank account, you have to get your KYC done, your Aadhaar card, PAN card, all that KYC things they will do. No, so whether that KYC norms banks are following or not before opening an account for the customer, that we need to check. And as I have told, current accounts are not for business purposes, whereas savings accounts are not for business purposes. Business transactions can be conducted through current accounts. And in individual accounts, you have to verify the balances, that too on a sampling basis, and interest calculation has been properly done or not. Especially on the savings accounts, interest has been properly calculated and posted to the accounts or not, that we need to check. Even you can get confirmation on a sampling basis. You can get the balance confirmation. And debit balances in the current accounts should not be netted on with the liabilities. They have to be shown separately. If there are any inoperative accounts, that for that account you have to pay very much attention. Why? Because if an account remains inoperative for a very longer period of time, bank can use them as a channels for committing the fraud and money laundering. Sir, when an account will be treated as inactive account or inoperative account or dormant account, if an account remains, if there are no transactions for over a period of 2 years, for 2 years, if there are no transactions in the bank account, that will be classified as inoperative or dormant. Next, so on a sampling basis, inoperative accounts revived. If any inoperative accounts are once again taken back to normal, or if any account has been closed from that inoperative accounts, from that you have to take a sample and verify it. If inoperative accounts are revived, that means from inoperative it has been made operative, then we need to check whether that has been done with only proper authority or not. Then when it comes to term deposits, so on term deposit, generally the customer will be entitled for a higher interest than when compared to the saving deposit. So generally, whenever the customer comes and purchases a deposit, a fixed deposit certificate will be given to them. So check whether that certificate has been provided or not. In case of bulk deposits, sir, what do you mean by bulk deposits? When the deposit is more than or equal to 2 crore rupees, then we need to check correct rate of interest has been offered or not. Why? Because higher the amount, higher will be the interest rate. Then if term deposit has been closed, there will be something called foreclosure penalty. Say for example, FD has been taken for 10 years, but within 5 years only customer want to cancel the FD. Yes, you can cancel, but from your interest some component will be deducted. That we call it as foreclosure penalty. We have to check that. And even recurring deposits also more or less the same kind of fixed deposits. On what is the main difference here is fixed deposit, once you will invest, recurring deposit on a recurring basis you are going to invest the money. Next, correctness of rate of interest we have to verify. Then they talk about deposits designated in foreign currencies. Sometimes Indian banks can have even deposits in the foreign currencies also. They talk about two accounts here, NRE accounts and NRO accounts. See here, NRE accounts and NRO accounts. So non-resident, where are the full forms here? See, I will tell you what is the difference between the two. Difference between NRE accounts and NRO accounts. So somewhere we have included here. See, in case of NRE accounts, see, it is generally non-resident NRE accounts will be opened for NRIs who are outside of India. Okay, NROs can be opened by anybody. The difference between the two is, in case of NRE accounts, there will not be restriction. Repatriation restrictions will not be there. Money can easily come in and go out of the NRE account. But when it comes to NRO account, there will be repatriation restrictions. In NRE accounts, since these are the accounts held by NRIs, so there will be no restriction on repatriation. You can bring the money, you can take the money out. But in case of NRO accounts, which are not NRI related accounts, so there will be repatriation restrictions will be there. So yeah, here itself it is there. NRE accounts are repatriable, whereas NRO accounts are not repatriable. Next, what else? So this is what regarding major things regarding deposits. Now talking about borrowings, sir, will banks also get the borrowings? Yes. From where they will get the borrowing? Mainly they will get the borrowing from RBI, if not from other banks or financial institutions. And they might get the borrowings within India, and even they might get the borrowings from outside of India. And they might get secured borrowings, or even they might get unsecured borrowings. So we need to obtain evidence regarding that borrowings also. So what audit procedures I have to perform? Number one, you can get the external confirmations from the borrower. You can ask the external confirmation certificate as per SA 505. That's what they say. You can comply with SA 505 requirements. And rediscounting, refinancing, you have to pay more attention. See, refinancing is a liability, rediscounting is a off balance sheet item. So I can't go into the details to make you understand here. So one difference here between rediscounting and refinancing, you have to be very careful. Why? Because refinancing is something a liability, whereas a rediscounting, it is not a liability, it is a off balance sheet item. So this much you remember. And especially if they have borrowed money at call and short notice, they can do it only with proper authorization. It is not a general transaction. So that's why if you find in the bank's balance sheet, they have borrowed some money which is repayable on demand, check whether they have got that borrowing only after concerned person's authority. And even you have to cross verify that transactions have been approved by head office. And even the amount shown in the branches is also properly classified on the basis of security or otherwise. And apart from that, there could be other liabilities also, there could be provisions also. So here mainly I will talk about the provisions. So mainly provisions are nothing but see, for as per the asset category, we will have the provisions. Just I have told you, for standard asset there will be provision, for substandard also there will be provision, for doubtful also there will be provision, for loss also there will be provision. So these and all provisions will be there. This we call it as prudential norms. In addition to that, there might also be provisions for expenses, provision for bad debts and also like that. Other provisions also would be there. And so when I say other liabilities here, broadly they speak about various things like bills payable, nothing but whatever bills payable. When I say, it is a broader term, it includes checks, drafts, traveler checks. So all that will get included here. So that will be one major liability. Next, intra-office adjustments will be there. Interest accrued, interest which they have to pay to their deposit holders, and also others including the provisions. So these things also we have to verify. Then we have contingent liabilities. Like the way for every organization contingent liability will be there, even in banks also there will be various kinds of contingent liabilities. And those contingent liabilities in the banks, we can broadly divide them into 6 categories. The 6 categories of contingent liabilities you have to remember. So what are the 6 categories of contingent liabilities? Claims against the bank which are not yet acknowledged as debts. Liability for partly paid investments. Sometimes you might have paid the shares partly. Bank has invested money in the company, they have paid only part of the amount. One call is still pending, then you might be called upon to pay that amount whenever that call has been raised. And similarly, liability on account of forward exchange contracts and derivative contracts, nothing but on options, futures, right, swaps, forward contracts. On all this also there might be outstanding liabilities. Not outstanding liability actually, whether it will result in an outflow or not, that we can't decide. So that's why it will go to the contingent liability. And banks also will act as a guarantor. Like in the case of letters of credit, bank guarantees, they will act as a guarantor. That will also form part of contingent liability. And acceptances, endorsements of other obligations, and any other item for which the bank is contingently liable. So like this, in the case of banks, contingent liabilities, we can broadly divide them into 6 categories. So repeat everyone, what are that 6 categories of the contingent liabilities? Claims which are acknowledged by bank, claims against a bank which are not currently acknowledged as debts, liabilities for partly paid investments, liabilities on account of derivative contracts, guarantees given on behalf of the constituents, acceptance, endorsements, and other obligations, and other items in which the bank is contingently liable. So all this we need to verify. So most of the things it will be general points only. You will try to find it, like any law legal opinions you have to consult with the external lawyers. You have to go through the legal documents, confirmation, comfort letters. So like, there's some common points you will try to say in every subheading. You can have a look at it once. Next comes the most important part now, reporting requirements. Sir, what will be the reporting requirements of the auditor? As I have told, then when compared with other commercial organization, in the case of banks, the auditors are going to have so many reporting requirements. So what and all are the reporting requirements? First of all, if you are an auditor of a nationalized bank, or if you are an auditor of SBI and nationalized bank auditors, in addition to their normal audit report, they are required to submit one report to the central government. Not every bank auditor, guys, only auditors of nationalized banks and SBI, they are required to submit an extra report to the central government. And in that report, what they will mention, whether in their opinion balance sheet is full and fair, containing all the particulars. Basically, whether balance sheet is giving a true and fair view, and also whether auditor has called for any explanation. As an auditor, did you need any information explanation, and have you got it? And whether transactions of the bank are within the powers of the bank or beyond the powers of the bank. Whether or not returns from the branches has been received or not. Did the branches send you the returns, required returns or not? And whether P&L account gives a true and fair view, or any other matter which he considers necessary. So these are all the matters on which the auditors of nationalized bank and SBI are required to submit the report to the central government. And normal audit report also will be there. Sir, how do I prepare the normal audit report? You have to comply with the standards on audit like SA 700, 705, 706, 710, 720. So all this, whatever we follow in the case of normal audit report, all that standards are required to be followed here also. And in case if you are mentioning any unaudited branches, this point we have already covered in other matter paragraph. So here also what you say is, if you are a statutory central auditor and if there are some unaudited branches in the entire bank, so that you have to mention in the other matter paragraph, you have to mention how many number of such branches were unaudited. Say for example, 100 branches are unaudited. Just mentioning the branch number alone will not be enough. Even you have to quantify what is the advance, deposit, interest income and interest expense for such unaudited branches. So for these 100 branches which are unaudited, what is the total interest income? What is the total interest expense? What is the total deposits? What is the total advances? So that cumulative figures, that quantification also you have to do it. Generally we do it in the other matter paragraph. And in addition to that, you are required to comply with all the requirements of section 143 reporting requirements, like 143 subsection 1, subsection 3, but 143 subsection 11 is not required. CARO is exempted for a banking company. In addition to that, you are also required to submit something called LFAR, long form audit report. Both branch auditors as well as statutory auditors are required to do it. And what is the time limit within which it is required to be given? So this LFAR is required to be submitted to RBI within 60 days of submission of LFAR by the statutory auditor. Generally, statutory auditor will submit the report to this LFAR to the management. Management will submit that LFAR to the RBI within 60 days of submission by the auditors. Next. In addition to that, you are also required to fulfill some other reporting requirements, like especially there was a RBI circular which says that if you are a chartered accountant, if you are a professional, either as a part of your internal audit or external audit or any other professional work, if you came to know about any fraud, you are required to report the matter to the RBI. If you fail to do it, you will be liable for action. So as per this circular, if you find out any fraud, then you are required to report even to RBI. In addition to that, you need to comply with requirements of SA 250, checking the compliances with the laws and regulations, SA 240, reporting of the fraud and all. And even if the amount involved in the fraud is 1 crore or more, reporting to the central government also will be applicable. As per 140 subsection 12, that fraud reporting requirements also will become applicable. Next. Apart from this, the statutory central auditors are also required to give a lengthy list of reports, as you could see here. These are not just the reporting requirements. You will give a normal report, LFAR you will give, and if you are a nationalized bank auditor, you will give report to central government. In addition to all that, there is a very lengthy list of reports which are required to give in the case of audit of banks. So that list has been given here. You can have a look at it. Okay. So even if I explain it also, that will be just like reading. So just list of reports which are required to be given by auditors of statutory central auditors, not branch guys. Statutory central auditors are required to share all this information. Then apart from that, we have one more concept called concurrent audit of the banks. So in banks, now one more concept has come. See, regularly after the end of the financial year, statutory audit will happen. But as we are all aware, since bank is dealing with lot of amounts of monetary consideration, monetary items like cash and all, public trust is involved. So industry thought that there is one more need for one more mechanism of audit, which is concurrent audit, where the time gap between the happening of the transaction and its verification has to be reduced. See, generally in the statutory audit, throughout the year transactions will happen. After the transactions have completed, after the year has closed, statutory auditor will come and verify. So if you see here, there is a gap between the happening of the transaction and its verification. There is a gap. Now they want to reduce this gap. They want such an audit which will happen on a recurring basis, on a continuous basis, where as and when the transaction happens, immediately that has to be verified. So in order to do that, they have brought this concept called concurrent audit. So as you could see, verification of transaction or activities as and when the transaction or activity takes place. So the main objective here is to verify the transaction within the shortest time possible. Okay, so that has been the main objective. And some banks, what they will do is they will have their internal staff. They will have their own internal inspection staff. Sorry, who will do the concurrent audit. Whereas some banks, what they will do is they will not have any internal employees. They will appoint external auditors to act as a concurrent auditors. They will appoint audit firms to act as their concurrent auditors. So any option they can choose it. And as we have told at the beginning of this chapter, there will be a department called Central Inspection and Audit Department will be there. In addition to that, Audit Committee of Board of Directors also will be there. These both will together decide the scope of the concurrent audit. So who will decide the scope of the concurrent audit? Central Inspection and Audit Department, along with that Audit Committee of Board of Directors. They both will collectively decide the scope, and while deciding the scope, they give importance to high risk transactions. They pay more attention to high risk transactions, and they do risk based internal audit, risk based concurrent audit. They will decide, and what and all will be covered as a part of the concurrent audit. They will verify cash also, deposits also, advances also, investments also, forex, housekeeping, other items. All the items will form part of their scope. Yeah. And apart from that, so what things you will verify regarding cash, what audit procedures you will perform in each of the area, everything will be repetition only. See, whatever the normal auditors will do, all those activities will be done even by concurrent auditors also, but only the difference is they will do it on a continuous basis. Standard auditor will get it done only once in a year, he will do it on a regular basis. That is what the difference, but the things which are required to be verified will remain the common. That will just be a repetition. And who will appoint the concurrent auditors? As we have seen, so that inspection and internal audit, inspection and that team, inspection and investigation team, along with that audit committee of bank, audit committee for board of directors will be there. So they both will decide the maximum tenure of the concurrent auditor. And there is one restriction also, as per RBI norms, the concurrent auditor's tenure should be maximum 5 years. And within that also, for one branch, he can't act as a concurrent auditor for more than 3 years. So maximum 5 years he can be appointed for a bank. In that also, for more than 3 years, he can't act as a concurrent auditor of the same branch. So that restrictions have been put. So remuneration, who will fix it? ACB, audit committee of board of directors will fix it. Reporting system. So in order to fulfill his reporting requirements, there is a structured format. So once again, this management and concurrent auditor both will sit together. They will prepare one format. According to that format, they will report it. And major deficiencies or aberrations, it should be highlighted. What and all major deficiencies you have found out, that should be highlighted. Quarterly review containing key features brought out during concurrent audit should be even placed before audit committee also. And there will be zone wise reporting. So concurrent auditors will do the zone wise reporting. So important issues will be discussed with the branch manager. Minor irregularities, you need not focus on them also in a so comprehensive manner. So if any minor irregularities are there, that will be pointed out to the respective branches, and they can get it rectified. But if there is any serious irregularity, that should be brought to the head office or controlling offices. If you find any fraudulent transaction, then you have to report it to the inspection and audit department and also chief vigilance officer. Not just reporting, even you have to follow up action also you have to do. So you have reported the findings, on that what actions are taken by the management, that follow up action also you have to monitor. And this is something regarding audit committee. So generally in the banks, audit committee also will be there, who will look after the audit function. So they will give a brief about that creation of the audit committee in the case of banks and all. Clear? So this is what regarding the audit of banks chapter, guys. Once again, important for MCQs, keeping in mind the size of the chapter, somewhere around 39 pages of the content is there, but you will hardly get 4 marks from this chapter. But if at all any MCQs get tested, I don't want you to lose the marks on that. So that's why I have done the revision. Okay. Hope you guys have benefited out of it. Bye everyone. Take care.